up close to about 4.5%. Anirudh Garg from INVasset PMS is now with us to talk about the markets, the way forward, and various themes you should be betting on. Anirudh, your view is that one should look at the underperforming sectors like consumer staples, IT, and there is going to be this rotational shift away from the erstwhile leaders. So maybe that's defense, capital goods, industrials, into the underperforming sectors. Take us through this view of yours.
Hi. First of all, a very good afternoon. A very good morning to all the viewers of CNBC TV18.
Good morning.
Thank you for having me, Reema. So what we have seen, we believe that we are into an old economy run. Because why? The valuations back in 2021, 2022, when this run started, for the new economy, be it IT, Pharma, FMCG, was predominantly high. And all these old economy sectors were comparatively priced pretty cheaper. And there was a lot of relative change. By relative change, I mean some advantage they had today, which they did not have, say, a couple of years back. So back in 2022, these sectors had a lot of advantages. The government had increased the capex, the GST collections were coming in, there was a majority government, there was a push on capital expenditure. Now what has happened is, again, two things. One, the relative change which was there has diminished a bit post-elections, though the total spending has not decreased, and this is a good thing, but the incremental spending that has to be there would now become a little problematic. And the valuation in these sectors, the way these stocks have run up in the last 2 years, a majority of them, say something like a Mazagon Docks or a Cochin Shipyard, these stocks have run up 10 times in the last 2 years. So somewhere we feel that now the valuations in these sectors have peaked out. Somewhere we believe the margins have also and the relative change has diminished. For us, this is not a right thing. And then automatically the shift is happening to the other sectors like IT, FMCG, Pharma, which had underperformed for the 2 years. Things have gotten better there. Pharma is seeing new relative change coming in from the US. IT has completed its cycle, which is generally, deeper than FMCG, but shallower than the commodities. IT has done it. We see expectation of the US rate cut. So we see the US growth rates revising in the coming few months. So somewhere the relative change is now favoring the sectors which had underperformed, and the sectors which had outperformed are now bound for some time and price correction.
Okay. So, let's talk a little bit, Anirudh, about some of these new age sectors, right? I'm trying to ask you about names like Zomato, Paytm, Nykaa, Honasa, all of these digital first businesses that we're looking at, and how they're in the news for all the right and the wrong reasons. I mean, big multi-baggers, and you have some underperformers here as well. What do you do with names like this? What do you do with the space overall? How do you navigate it?
So, see, they are wonderful companies set up by wonderful entrepreneurs out there. They have changed the way a particular type of transaction in the market was perceived. You had to, before Blinkit, getting things from the market required some help and stuff like that. Now you don't require anyone. Blinkit has changed the model altogether. In 10 minutes, your thing is delivered to you. And somewhere you tend to consume, when such facilities are given, you tend to consume more than you actually need. So these guys are increasing the market as a whole and also shifting the entire market on them. See, before Zomato came in, you had only McDonald's and Domino's, and these were the two companies that we used to talk about and analyze very well. Now I don't need a Domino's pizza. I need something, a new entrepreneur, a new chef knows how to prepare pizza, can sell it through a Zomato, and it can be delivered to me, as soon as possible. So I don't need my home delivered pizza now to be a Domino's pizza. So somewhere we feel that the way the businesses are being done due to these new age companies have changed. The meter that we keep primarily, the number one is that we should be consumers of these businesses, and to an extent that we are not ready to replace them with some other upcoming app or something. So these are wonderful businesses. You just have to make sure that the business models are right, because if the demand is there, if the consumers are using them, they're not under some regulatory framework, and there is an open market to cater to, these companies should do pretty well. just a word of caution that somewhere we need to look at the valuations of overall market and the stocks as well. Because when I believe the best way to enter these companies is whenever there is a correction, or you can do your SIPs. Whenever there is a major correction of say 20, 25, 30%, you can go in for a lump sum. Otherwise, you can keep doing your SIPs in your wonderful companies.
So do you have any of these new age tech companies in your PMS portfolio with the appropriate disclosure, if you could tell us?
We have missed out on the Zomato rally because we were more focused on the capital goods side of things, and that played out really well for us for the last couple of years. So yes, whenever these stocks show correction, because see, one point remind the markets that I've seen in the last 17, 18 years of my experience is that corrections are inevitable. They have to come from time to time. And those are the times when you have to keep your conviction and buy the stocks that you were liking when the markets or those stocks were expensive.
Okay, so where do you have conviction right now, Anirudh? Apart from the sectors that we spoke about, anything else where you expect good earnings to come through? There are so many themes, right? I mean, last week, for example, this whole cables and wires theme was doing very well, where one brokerage spoke about cables and wires growth doubling compared to GDP over the next 4 to 5 years, purely because of the real estate boom. Any of these themes, home building, real estate, that you like?
See, I believe that all these themes are intact. First of all, premiumization theme that is going on in India and around the world is intact. There is no problem. Somewhere they get expensive, then they correct, and then the bull run continues. That is the nature of a bull run. You're absolutely right. The wire themes, especially the branded ones, are doing pretty well, and they will keep on adding market share and keep on increasing in value. But somewhere I feel that the overall market is now entering a zone where I would call these markets very expensive. So I will proceed, tread with caution. A lot of money has been made in the last 2 years. Equally important is to preserve that money. Because in bull runs, you tend to make mistakes following the momentum at the very end. So I believe enter safer stocks, enter safer shares, or buy these shares through SIP. And whenever there is a correction, you tend to put in your lump sums. Because somewhere the market is giving hints of the valuations from here. For the large caps, I believe it's still okay. Large caps are not that expensive. We see our technical targets for the Nifty are 26,000 plus. Standard disclosure here that we can revise them. But for other themes or sectors which were prevalent and winning in the mid and small caps, arena, we believe that somewhere the rally has fizzled out.
So when you say the rally has fizzled out, is it also in some of these companies and sectors that have given huge returns up until now? So something like a defense, something like the PSU names. If you have presence there, then do you sort of churn out?
Yes, I believe so.
Okay. All right. Thanks a lot for joining in. Appreciate your time here on CNBC TV18. Let's slip into a short break. Gautam Badalia from Route Mobile will be joining in next.